Hi there, Serial Trader here. I want to look at the major US indices and starting off with SPX. Alright, so since the last video, we actually did have that little pop up, but it didn't take off as I was perhaps anticipating. And now we've sold off pretty substantially as of today's action, so Friday. But you can actually still make the case that the overall pattern here is still intact. So in the last video, I was proposing a wave 1 and a wave 2 in the bullish scenario, which I felt was perhaps more probable at the time. I haven't been shaken off that completely yet. And then I was also proposing this would be another 1, 2, and then we had a little 1, 2, and then we were starting the wave 3 of perhaps 3 to the upside. Well, that hasn't happened yet, but that doesn't mean that this can't still be a wave 2 to match up with this wave 1, and let me explain. So if we just put on a labeling here, I would propose that we perhaps just have a larger flat, and maybe we were just a little premature on this this degree of wave 2 being complete. So the only place this actually gets invalidated is we take out this low down here, which is at 42.9246. So anything above that, technically, we still have a high, a higher low, a higher high, and anything above that level I just mentioned is still another higher low, and still a technical uptrend. And I will also mention, if we just do a fib retracement of this proposed degree wave 1 here, we're coming right into that 618 retracement area. And near the end of today, we start getting a little bit of a reaction off of there anyways. Certainly need more to be convincing that that was a notable pivot. But it started reacting, and we'll see what happens into next week as far as that goes. But yeah, technically anything above this level, 42.9246, can still be considered just another wave 2, okay, of the potential 3 of the larger 3, and then we're still working that larger impulse wave to the upside, for our first 5-wave move up out of this significant low we made there on the 24th of January. Now, I understand the bearish scenario very much here, so let me just well, before I bring that up, let me go over the Dow, okay? And the reason why I don't think the bearish scenario should still be embraced just yet is because the Dow suggests otherwise. So, okay, if I go to the S&P, technically this didn't actually make a new high, this B wave here. We went up to 45.9003, which was slightly below this 45.9531. So if you want to be a real bear, okay, you could let's just clean this right up. If you want to be super bearish, okay, you would call this an ABC up, right? And then you would say that we have this, which would be a wave 1 down, wave 2 up, and now we're going down in some third wave of a still larger bearish sequence. Okay, I understand that is technically valid because wave 2 can have a deep retracement as long as it doesn't take out the origin of wave 1, which in this case you could make that case. But I would counter that on the Dow Jones Industrial Average you can't, because we actually did make a new high. We made a 3-way move up to new high, which is very characteristic of an ABC expanded flat, okay? So that argues strongly against that interpretation on the S&P. And, whenever you have a conflict like this where one indice breaks that rule and the other doesn't, and the other one relies on it being super bearish for not breaking that rule, I have trouble believing that the Dow is just going to do an expanded flat wave 2 and the S&P is going to fall down in some third wave. I don't think those two things can really coexist for the most part. Therefore, I will let this significant piece of information on the Dow influence the wave count that I choose to go with on the S&P. So that's my rationale there. And if we just well, I think I can just back up here to return what we had. So this is what I'm going to go with for now. Now during the week, I did trim my position because once we got up here and we didn't actually take out the high and we started backing off, to me that was a signal to at least lighten up on the long futures, which I did. Now I still do have some long, not as much, and I actually started buying back some, like adding to the position that I'd sold up here towards the end of the day when I saw this little bit of a reaction up to 618. And currently my stop, basically my position stop, but also my analytical stop for remaining of a bullish opinion here is this low here on the S&P, which is 42.9246. Anything above that, I will remain bullish, and I also will remain long as far as my positioning goes. But I'm certainly prepared to be stopped out and change my mind. But until that actually happens, I'm not going to try and guess that that's going to taken out. Sorry, guess that it's going to be taken out. It hasn't been taken out yet. And I'm currently of the opinion that it probably won't be. But if it is, the stop will hit, and I will change my mind and look at a different positioning. Just look to change my positioning, I guess is what I'm getting at. Okay, so that's really all I wanted to go through, I guess, for the wave count. And despite all that's happened this week, the overall wave count, although modified, hasn't really changed since my last video. And I know we got the the high inflation, Federal Reserve is going to get all hawkish on us supposedly. We got Russia, Ukraine. We got the trucker blockades and freedom protests and all that. It seems chaotic, but until I actually see this technical uptrend get broken, I'm going to be hard to shake off here on trying to keep a bullish stance. Because all too many times before we've seen it where, oh yeah, this looks like a guaranteed bear market now. Buy puts, they're going to be free money. And somehow it doesn't go down, just starts going back up again, and then we have to rationalize to ourselves why that's happening despite the fundamental backdrop. Well, that's why I don't really care about the fundamentals as far as trading goes. I'm aware of them just, for interest's sake, but I strictly stick to the charts and what the charts appear to be telling me. Okay, so that's probably enough of that rant. Now what I will do is head over to the Thinkorswim charts. And what do we got here? So not any particular candlestick signals. We are back below the 200-day moving average on SPX. We topped out below the 50-day moving average. We're below the 20-day. So we're certainly showing some technical weakness. We did get slightly overbought on the stochastic oscillator, and now we're starting to come down off that overbought condition. So listen, I can definitely see the bear case. I can see it all too well, but I also know that oftentimes when it seems that obvious that something bearish is going to happen, the exact opposite does happen. And we still have that technical uptrend. Anything above that level is still a high or low with an ongoing uptrending pattern, right? Weekly chart on the S&P. Anything there? Not really. I guess you could make the case here. Well, no, we got something. We can make the case we have a weekly bearish engulfing candlestick. So we opened above the prior week's close and we closed below the prior week's open. So we fully engulfed the real body of last week. So that is something to mention. Certainly. We are still above the 50-week simple moving average. Thought I'd bring that up. Actually, before I head over to the Dow and the Nasdaq, I think since I brought this up in the most recent serial trading video on technical studies. So this is the average true range channels, the ATR channels. So today we pulled back and closed just about at that -1 ATR channel. Now, if we hold around there, that is actually quite a typical level to pull back to and then reverse from if you're going to continue the uptrend. So there is that. Just thought I'd point that out before I resume the regular routine here. Okay, so the Dow Jones Industrial Average. My thoughts on the fact that we made a new relative high here, and the S&P and the Nasdaq didn't. To me, that just argues that this was an expanded flat correction. So we got like the 1-2-1-2 count in effect on the Dow, and I think that translates over to the other two indices. We'll see if I'm right next week. Okay, we are below the 200-day moving average on the Dow and the 50 and everything basically, and we did come up to the overbought condition on the stochastics oscillator, starting to come off that condition. So this definitely has some proving to do. We got to get a reversal and start going back up pretty soon here to save this. Weekly, what do we got going on here? Weekly, not a bearish engulfing on the weekly. Didn't close low enough on the Dow. So the Dow a little relatively stronger compared to the S&P. And we're sitting right about on that 50-week simple moving average on the weekly. Okay. And what do we have on the Nasdaq Composite? Same situation on the Nasdaq Composite. I would still view this as a 1-2, 1-2, and this is a flat, like I mentioned there on the S&P. Now, this is not a particular candlestick signal, but strong down day, obviously. Overbought on the stochastic oscillator, starting to come off that overbought condition. Below all the major moving averages. Weekly, what do we got on the weekly? Looks like a weekly bullish engulfing candlestick, just like the S&P. So certainly notable. So we could be setting up for a large move down, although I remain highly skeptical until we actually confirm on that. In fact, I'm still leaning towards a more bullish resolution here. And let's move on to, I don't know if we need to look at the Nasdaq 100. It probably looks pretty similar here. Yeah, nothing really to remark on that looks different there than the composite. Okay, on the VIX. So the VIX, we had a pop up, obviously, with today's downside action, but looks like we're rejecting pretty substantially on a closing basis from the intraday spike high on VIX, and we're making a significantly lower high than the prior spike high. So if the VIX continues bleeding off, that's typically bullish for the indices. We'll see if that continues next week. And what else? I think we'll go over the VIX tool. Okay, VIX tool. So I would say we're technically on a sell signal here, but it's not of the highest quality. And you know, once we get into more of a sideways kind of range, even if it's a pretty large volatile range, it starts being less effective. This works better in a trending environment, because right now we're just getting whipsaws. You know, we'll get a buy signal, we'll get a sell signal, but really we're just moving around within a defined range. We're not making new lows or new highs. So that makes me care less about this as far as respecting the signals, right? Just a thought anyways. But yeah, technically in a sell signal currently on this tool. And what else did I want to mention before I wrap it up here? Okay. I think I actually did put on a little bit of a hedge for this coming week. A little Spx Put Debit Spread. Just in case we do actually go more bearish. What do we got here? The 4300, 4280 spread. I think that's what I'm looking to show here. Yeah, so I bought 5 of the 18th of February 2022 4300 SPX puts, and I sold 5 of the 18th of February 2022 4280 puts. So a little vertical spread, 20-point spread, 4300 to 4280 spread. And let's see, max risk 850, max reward 9150. So it's like a nice, you know, just about a 10-to-1 risk-reward ratio. Risking 850 to possibly make 9150 if we close at or below 4280 on the on next Friday, on the 18th of February. So that's kind of just a little cheap hedge. And if that happens, I'll be getting stopped out on the existing long futures. Then ideally closing this for some sort of gain, depending where it ends up. But if we really start tanking, then this could potentially make over 9,000 for just risking 850, so not too bad. But that certainly doesn't mean I'm bearish. Just means that in case it does go bearish, I want to get a piece of it. I don't want to just be stopped out and with no other position to benefit. So that was the rationale behind that. Okay. Well, that's probably all I wanted to go through for this week. And just to reiterate, I suppose, despite this you know, bearish backdrop that we've been left with as of Friday's close and all the geopolitical stuff going on, I will respect this technical uptrend unless it actually confirms and breaks. So that's my take there. All right. Have a good weekend. Serial Trader signing off.